But in terms of whether or not this is sustainable, here's what I didn't expect. Though in terms of the rest of the market and how this is likely to affect your money directly, here's where things get very interesting. The stock market. Look, on the surface, despite every pessimistic headline, objectively, the S&P 500 has done incredibly well in 2025. I mean, let's face it, we're up more than 30% from the April lows, and over the last 5 years, we've pretty much doubled in price, which is essentially the equivalent of getting a 15% annualized return every single year. But in terms of whether or not this is sustainable, here's what I didn't expect. Both Bank of America and Morgan Stanley now predict that we could see another 8% increase throughout 2026, bringing the S&P 500 to a whopping 7,200. However, others have pointed out that above-trend growth like this usually isn't sustainable, and that long-term, we'll see smaller returns as the market begins to balance out. For Goldman Sachs, this translates to just a 3% annualized return over the next 10 years, compared to JP Morgan, who previously predicted that we'll see a 6% annualized return. That's why it is very important to recognize that 15 to 20% annualized returns are not normal. They do not keep happening indefinitely, and there is a chance for the next decade that we do see smaller returns than most people expect. This is why I think that we should expect the best but prepare for the worst.